What's going on, everyone? In this video, we're going to learn how to scalp options with a very small account. So I know a lot of you guys come to trading because you can make a lot of money really quickly. I'm going to be the first one to tell you that you can make a lot of money very quickly. But if you have no idea what the hell it is that you're doing, you have no trading strategy, you don't work with a mentor, you don't be a part of a community, you're just looking at social media, taking people's trades that you see online that are making 5,000%, you will get your face absolutely ran over. So learn a basic strategy. I teach a few strategies in evolutiontraders.com, in the Discord community, various strategies for various different account sizes, ranging from very simple ones for smaller accounts to more intricate and elaborate ones for people with much larger accounts who are looking to do day trading a little bit more serious. With that being said, what we are looking at here is the triple Qs. I would recommend start off just trading 1 or 2 tickers. If you're going to look for 3 tickers because you don't want to just solely trade the triple Qs or solely trade the S&P 500, put Apple or AMD in the mix, right? If you have a small account. For this video, for this training purpose, we're going to be looking at the triple Qs. The triple Qs is the NASDAQ 100. It's very volatile. It's very liquid. It moves. You can make some money on it. I'm going to give you a perfect example of a strategy that you can start using tomorrow, even if you have an account size of $500 or $1,000. Now, mind you, if you do have an account size that small, you're not going to make tens of thousands of dollars per trade. Hell, you might only make $50, $60, $70 per trade. But again, it's all about keeping the lights on, right? It's all about staying in business. It's all about managing your risk. Am I going to sit here and tell someone with a $500 account that they can grow it to 50,000 in a month? Absolutely not. Is it possible? Yes, but it's very slim that you will do it. However, you can make an extra $500 a month. You can make an extra $1,000 a month. And if you need that money to, say, pay bills, or maybe take an extra vacation a year, or do this and that, maybe you want to help compensate your car payment. Maybe you want to help compensate your auto insurance. Maybe you're looking to, get that nursery built for the child that you're expecting. If you're looking to just add $500 to $1,000 a month, it's entirely possible. If you're on a different road where you want to possibly grow that account, that $1,000 account, into $5,000, $10,000, $20,000, or then you can start making $200, $300, $400, $500 per trade, then just leave the money in there and continue to grow the account. So there's 2 sides that you can look at it. Just have a plan. With this strategy, what we're going to be using is the 15-minute time frame. Okay, I use the 5, I use the 15, I use the hour, I use the 4-hour, I use the daily. For this strategy, we're going to be using the 15-minute time frame. I'm going to show you exactly how it works. It's very simple. It's very direct. All we are going to have on our charts is the 20 SMA, the 20-period moving average. It doesn't matter what platform you're on, just put the 20-period moving average on your chart, nothing else. All we are looking for is confirmations over or under the 20-period moving average, because if we are trading over the 20-period moving average, we are on a upwards trend, right? So we want to be trading calls. If we are trading underneath the 20-period moving average, we want to be buying puts. But it's a little bit more complicated than that. So what you want to look for is a stock that was previously, or a ticker or an index that was previously trading underneath the 20-period moving average. That price action has now crossed over the 20-period moving average, and signifying to you that potentially there is a short term, based on the 15-minute time frame that we're looking at, change in trend. Okay, so this does not mean that because we're trading underneath the 20 period and now we've crossed over, that we're going to continue to ride higher for the next 3 to 4 weeks. All it means is that maybe potentially for the next 3, 4, 5, 6 candlesticks, that we potentially can have a very short-term change in trend. And as a day trader and a scalper, that is all we are looking for, is just to get in on that thin little area where we can take a little piece of the pie. So if we look at today's price action, today was a pretty easy indication or indicator that we should have been going long on the day. We have pretty much been trending higher all day. We only had one pullback slightly into the 20-period moving average. The way this strategy is going to work is, if you kind of notice here before in pre-market, right, this is all this light gray box is pre-market. This is after hours yesterday. This is pre-market today. You can notice that we're just kind of trading under and over the 20. We're trading over, and then we're trading under, and then we finally break it for the last time. You can see each little green or red arrow kind of signifying and telling you guys that there's a new change in short-term trend. if we kind of look at 5:45 a.m. Pacific Standard Time, you can see that we break over the 20 period moving average. Okay, now obviously if you're trading options, you can't even start to trade options until the market opens, so you're kind of sitting there wondering, what the hell should I do? I can't buy this. It's giving me a setup, but I can't buy this. That's completely fine. What you need to do then is take the pre-market high, which was this wick here, and you need to draw a price level line or some type of line across here, so you can just kind of see 315.84. If that was the pre-market high, and you see that we were trading under the 20, now we're trading over the 20. Obviously this is at pre-market, so we can't just buy options. All we are looking to do here is wait for the market to open, and we need some type of close over this pivot. If the pivot is 315.85, what we need to do is then break the pivot and close over. As soon as we get this close over, we can now buy. Okay, this is when we're going to be entering on this candle. Now, I teach a couple of different ways that we can use this strategy, from the 5-minute to waiting for confirmation to not waiting for confirmation. But in this strategy, what we're going to do here is we are going to watch this candle that started to form at 7 a.m. Pacific Standard Time. We're going to be watching the clock, right? So if you guys have a clock in your room, you have a clock on your platform, what we are going to do is coming down to the last minute of this 15-minute candle, the last 2 minutes of this 15-minute candle, as long as it is very, very clear that we are going to close over the 20, we are going to put our money into this candle, especially when it's this strong and it's this explosive. So we're going to watch this candle. We're going to watch it take out the pivot. All we need for confirmation is that we're going to close over the pivot. And then we want to put our money into that candle. And as that candle starts to come to the close, the last 3 minutes, the last 2 minutes, you want to start putting your money into that position. Now, if we look at the price coming to the end of this candle, we would be looking at 316.50, 316.60, hell, even 316 even. If we come over here to see what's the closest strike price that we could have got to that 316 area when that candle closed, you can see here we have a 0 DTE, which is 0 days till expiration. These contracts would expire today. Make sure you sell them at the end of the day, or you sell them in profit. You do not hold these overnight. 316 is now trading for $3.51. This contract alone is up $2.39. So one contract at this given time, when you would have been looking to buy it, was trading at around $100. So if you have a $500 account or you have a $1,000 account, trading $100 to $150 contract for a 0 DTE is absolutely fine. You can afford to make 10 trades on a $1,000 account before blowing yourself up. Anyone who loses 10 consecutive trades has a piss poor approach to the market, either mentally or strategy wise. Get with me, I will help you on that. But if you look at where we were at 316, you could have essentially got in here on this close of this candle here. We do consolidate for another 15 minutes and then we get another explosion, and then we pull back. There's no indication to get out of this because we never make a close lower than the previous 15-minute candle, and then we consolidate and then we push off. And then we get another pullback candle here, which is just a pause candle that never closes below the previous 15-minute candle. We get a pause, never closes below the previous 15-minute candle, and now we've popped. Essentially, you could have bought into this trade at 7 a.m. Pacific Standard Time, held it literally till 9:43 in the morning, and sold for a $250 gain. Now, will these trades come each and every single day? No. It's your idea to identify when you see them. It's your idea to identify when you get out. Now, you may be asking, where would my stop loss be? When do I exit the trade? You would have exited this trade if we did pop, consolidate, pulled back into the 20 and closed below. As soon as we close below the 20 period moving average, your trend trade is now over. That is your stop loss. If that was the case, you would have been selling out of this position below 315. So if you look at your entry at around 316, you'd be risking $1. But if you look at where we're currently trading at and currently pushing up, you would have been risking $1 to potentially make $3 on the trade. A potential $250 or $300 off a simple $100 investment. That is how you can grow a very, very small account. Again, I would only look to trade 1 or 2 times a day. Options that cost you anywhere between $100 and $200. If you have a $1,000 account, around $100 to $150 if you have a $500 account. If you lose one trade and you lose $80, you can take another trade. If you lose another $80, that now is $160. I would keep my days lost at around $100 to $200 a day. Okay, it's a probability based game. You're going to win some trades, you're going to lose some trades. If you enter into a trade and you size too high, meaning that you have $1,000 in your account and you look at the options on the triple Qs and they're trading at around $120 to $150 dollars a piece, you go out and you buy 8 of these contracts and you get blown out on one trade. Guess what? You've now blown up your account. You have no money to trade tomorrow. The idea of this business is to take little pieces of that pie, put it in your pocket, put it in your pocket, put it in your pocket, continue to grow your account over time. I will tell you that if you have a $50 account or a $500 account or a $1,000 account, you're looking to take 80, 50, 100, 150. In this case, $250 on a potential trade. It's a fantastic risk to reward ratio. It's a fantastic strategy. Again, just to kind of recap, if we go back, let's just go back to the left, right? You may be thinking to yourself, okay, that worked today because we are trending. Well, the market hasn't been that trending for that long. Yesterday, the market looked like death. So if we kind of look at yesterday's price action and we look at this setup here that we got at 7:45 a.m. Pacific Standard Time, the price of the triple Qs was 313.43. You would have put your money into this closing candle. You would have got an entry price at around 313. This moves in a matter of an hour all the way from 313 all the way up to 314.60. 314, the high wick obviously is 314.92. You're never going to top ticket. This is what I would recommend as far as taking profits. If you can afford to play one contract, if you can make $1 or $1.50 on the triple Qs and your contract makes $80, $100, $120, hell, even $70, I would take that profit. Even though, yes, you could have made $250 on the day, you could have also been up 120 and then given it all back. And now you're emotional and now you go trading on tilt and you start to lose trades and blow up your account. Again, take $70 on one account, take $60 on one account, on one option contract, take $100 on one options contract. Okay, do that day in and day out, and you will grow that account. Take your account from 1,000 to 1,200, from 1,200 to 1,500. Now you can afford to buy 2 contracts. So you can sell one contract when you're $80, $60 in profit. You can hold the other contract potentially for $100 to $150 in profit. And that's how you're gonna start to stack your P&L. Focus on one strategy, focus on a community, focus on your education, focus on your mindset, focus on yourself first. There's a lot of traders who are just looking to social media, trying to gravitate to people who are posting big flashy gains. I just called out 1,000% winner. I just called out 250% winner. Look at me, look at me, look at me, look at me. No one fucking cares, okay? No one fucking cares that you called out 1,000% winner. You know what matters? It's your education. You know what matters is that you're trading with people that actually understand how to trade the market. I am not saying that they do not understand how to trade the market, but if you don't fully understand why they're telling you to buy, Apple at 150 and you're just buying long and you have no idea where to sell, it's detrimental to your trading career. Understand the process first so you don't have to rely on anyone else's callouts. I stress so much on understanding your mindset first so you don't have to look to someone else, for their specific call out or signal, right? So again, with all of this information being taken into account, what are you going to do to get better as a trader? Are you going to manage your risk better? Are you going to learn a system that works? Are you going to be disciplined? And are you going to invest in your education and yourself as a trader? Or are you going to continue to spin your wheels in the dirt and look for the big shiny gold pot at the end of the road that is not there because all you are doing is chasing a facade? Understand, be disciplined, learn the markets correctly, trade with people who are doing this on a day in and day out basis. Get familiar. Trading can be a very lonely game. You need to be able to sit and bullshit with other people when the market is slow. You need to be able to have someone snap their fingers, and shake your head around and tell you, hey, you're in a stupid trade. The trade has gone against you. There's no sense in holding that trade. Cut your losses here, live to trade another day. If you want that, join evolutiontraders.com. It's a no bullshit approach to trading. It's a no bullshit approach to how to get involved inside the markets on a day in and day out basis and actually understand what it takes to be consistent. Now, I'll get to that when you guys join. I have so much more to say, but I don't want this video to go too long. I'll see all of you guys on the inside at evolutiontraders.com. To everyone else that just likes to enjoy the free content, make sure to like, comment, and subscribe, and I'll see you guys all later.